When you look at this chart and you've done even a minimal amount of understanding trading, I don't care if you've automated your strategy and you got to watch it, you got to tweak it, you over tweak it, under tweak it, no matter where trading goes, we're always going to have input. You're working along with AI, good for you. Going to have to understand what markets are trying to tell you. This is a consolidation box. This is a low. These are a series of lows. And when you start to get below a series of lows, it's almost like ice that's cracked. At some point, boom, you're going to fall through it. When you're walking on ice and you're in the middle of the pond and it starts to crack around you, that's like this crack, 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 crack. At some point, whoo, you're you're in the water. Boom, you're in the water. And you're trying not to be in the water. Now these are guys that are still long walking on the cracked ice in here. Now they're in the freezing cold water. The point is, you should be able to read that that breakout was possible just based on all of these, you know, you call this a swing low, and then all of these rotation lows, setting the bottom of a consolidation box. Here's another one for you. Understanding economic numbers like a trader, not an economist, not a pundit, not a politician. You got a strong payroll number. Number one, you would know that it was a very strong print, not just a little upside miss. It was a strong upside miss. You'd also said the revisions for the previous 2 months were up. Therefore, jobs have been much better than expected. The markets are always pricing in what's expected. So the print is not a surprise. Well, why do you go up? I don't know if you could see it on this recording, but the market that happened back in here, the market did this. It spiked up and then came down and broke all the way into here. And people would say, why did it go down? It's good. It was a good number. Well, it went down because we understand trading as a trader, not an economist. It went down because strong economic numbers now are putting the Fed on more on inflation watch, which means they're more inclined to hike rates sooner rather than later. And sooner rather than later, hiking rates mean this for stocks. Period. And if a number gives the Fed a little bit more like eagerness to hike because they're worried about inflation, equity prices, stock prices don't like that, and it's bearish. All right. And also you should know this as a trader, not a pundit or politician, that how does a central bank fight inflation? They have to raise interest rates. Why? Because the definition of inflation is too many dollars chasing too few goods and services. So how do you restrict and pull money out of the supply? Make it more expensive to borrow. Higher interest rates, less people borrow. Low interest rates, more people borrow. So when you want to stimulate the economy, you lower interest rates. When you want to slow it down because you're fighting inflation, which means the prices are getting too expensive, you raise interest rates. Now, equity markets want cheap money. So they always want low interest rates, low borrowing costs. And when the Fed and the central bank, which is called the Fed in the US, that's the name of our central bank, the when the Fed raises interest rates and they're too late, like they were, I don't want to get into that whole story. But what I will say is that the um the Fed's number one mandate, all right, was always to fight interest rates. That's their number one mandate. Then they get the dual mandate. Give us another mandate. The dual mandate is fight interest rates, which is raising them, stimulate the economy, labor market, which means lower rates. That's how you start to understand Fed action, central bank statements, comments, direction, bias as a trader, not an economist. All right. Dual mandate. And before this Iran war, they were dovish. Dovish was inclined to cut rates, and they would have in the second half of 2026. But when the war created higher oil prices, which is higher gas prices, higher energy prices, everything in the world essentially touches the price of gas, because it takes the price of gas to fuel and move stuff. So inflation, which was kind of going, I mean, first year of the Trump administration, they were doing a good job in keeping gas prices 30 cents lower than the previous year. We were going into summer driving season with maybe some of the cheapest gas prices in 5 years for the May, June, July driving season. And then May 28th, or I'm sorry, February 28th happens, and oil goes from 67.21, which was the close on February 27, to 90, 95, 105, 115. Without getting into that, getting back to this, when you're looking at a market, you're trying to predict where price is going to go. What you're really trying to predict are when and where buying and selling is going to come in. If you take a look at our green and red lines, you can see it walk up to this red line. Look at my cursor, came down. Walked up to the green dash line, came down. Well, how do you get short at resistance? You wait for pink triangles. You wait for blue ones to get breached. You wait for the laser to go red to green. So you could track your competition. Keep it simple. All the work is already being done with where good support and resistance lines come in. The work is already done by understanding what you're really trying to predict. What you're really trying to predict are future sellers versus future buyers. Always remember the versus. You got to have future sellers. You got to compare it to something in order to find value. That is the way you find the value of anything. There would be no such thing as good looking people if there weren't ugly people. You have to compare and contrast to find value, to know if something is cheap or if it's expensive. And when it's expensive and overbought, the price goes down. When it's cheap and oversold, the price will go up. That's the reason why markets move. They move because they get too long or too short. When they chop sideways is everybody thinks whatever the price is, there's value there.